Welcome to another episode of Break Away from the Rat Race. And today I have the pleasure of speaking with Boris Mordkovich. Boris is a high-tech investor, entrepreneur, and also a real estate investor. He is currently the CEO and co-founder of an electric bike company called EVELO, as well as a real estate investor focusing on short-term rental. He hosted over 10,000 guests through his company, Moving Castle Hospitality. That's kind of his brand. He's working along with his wife in the acquire, renovate, and launch these short-term rental properties all over the US. So his specialty, coming from the high-tech world, has been to basically use technology to automate a lot of the business. And as you know, I'm all about financial freedom, passive income. So I'm very curious to learn more about how he has accomplished that. But first, Boris, welcome to the show.
Thanks so much. It's great to be here.
So I think I also come from a high-tech background and real estate investing, and I really like, and as you know, I mean, I'm a big proponent of financial freedom and passive income. But how was your transition, like from the high tech into this real estate rental? It's very different. It's a different world, especially when we talk about short-term rental. It's so much more about customer service and guest experience. So how did you transition over?
Absolutely. So in some ways, you could say that it was accidental as well, because back about 4 to 5 years ago, I was running the electric bike company that I co-founded and that I continue to run today. And my wife and I, we were actually talking about acquiring a property and doing it as an Airbnb for a couple of years then. In large part because we were always huge proponents of travel. We used Airbnb as guests all the time, and this concept just seemed very appealing to us. But it took a little while before we pull the trigger, and at a certain point we got our first property and we put it up onto Airbnb, and the results were pretty surprising. I mean, they were much better than we expected. So we began to think about what it would look like if we wanted to do more. What it would look like if we would want to automate the processes so that we can continue to work in our full-time jobs while also building up a real estate portfolio. And slowly, every year we continue to add 2 to 3 properties, and this is where we are today.
So I think this is very interesting, and I think people don't realize this is how you scale up your business. So we all kind of get started. We all kind of do, not all of us, but a lot of people, when you start as an entrepreneur, you invest in an area and you start with one house and say, well, this worked very well. So, okay, how do I scale that up? What are the key components to scale that up? Often people think about scaling it up a lot further, and they do 1, they do 3, they do 5, they do 10, and now they're buried into a situation where they have to run around, do everything. And what I like about what you've done is that right up front, you say, well, this works well. How do we scale it up? So tell us more about kind of like that process and what you decide to work on up front.
Absolutely. And, one fun fact is that we kind of had a deadline to figure this out, because we were actually getting married at that time, and we were planning this 7-month-long honeymoon where we wanted to drive from New York to Argentina. And we knew basically that whatever it is that we do up until that point, it has to be functioning in a way that we can handle it remotely, and that we can still effectively enjoy our honeymoon without thinking about real estate all the time. So this forced us to think about this effectively from day one. And it was actually a somewhat natural transition, because in our tech business, we think about this all the time. We always think about processes, how to automate mundane tasks, how to do things more efficiently, how to train other people. So when it came to short-term rentals, we applied a lot of the same tactics. Fortunately, we live at a time when there are a lot of really great tools available to pretty much any real estate investor or short-term rental host at a very small price, but that have an outsized impact. So as an example, we use a tool that allows us to automate 90 to 95% of all of the guest communication. So not only it sends them check-in instructions and check-out instructions, but it also detects questions about parking and early check-in and all of these other frequently asked questions, and it sends them a pre-made response. So that leaves us to just have to focus on things where we can add value or kind of unique situations. There is a similar tool that we use for pricing. A lot of, let's say, hosts or real estate investors, when they think about how to price their asset or their property, they do some research, they set a price, and then it's largely set it and forget it. In our case, we use a tool that looks at the market, at every market where we operate. It looks at all of the demand, basically. What are the events that are going on? How much other people are paying? What are the occupancy rates? And it looks at the supply. What is our competition setting their prices at? How is their occupancy doing? And it basically adjusts all of our prices automatically every single day for the full year into the future.
Wow, that's amazing. So, so let's talk about that. Let's talk about kind of like the how, if I'm interested in doing something, I want to have like really set up a strategy and invest in short-term rental. So there are some tools that can automate it. So in terms of strategy, I think I can probably automate and do, let's say 90% of the work is automated. So it would be like pretty much a passive income from that perspective. So where do I start as an investor? Do I go and what market do I look at? And yeah, let's start with that. Let's start about the markets.
Sure thing. Yeah. And this is how we typically think about it. We break it up into three parts rather. The first one is how to select the market. The second one is how to select the right property and what to look for there. And the third one is how to automate it in a way that you don't have to be there to deal with every single problem that shows up. So coming to the very first question, how to select the market. So our philosophy have always been that you should live where you want to live and invest where the numbers make sense. And I think it's very applicable for a lot of people that live in expensive real estate markets, especially on the East Coast, on the West Coast, where it may be just too expensive to buy another property as an investment, or the numbers just are not that attractive. So in our case, we invest a lot in Midwest, even though we live thousands of miles away from there. But broadly speaking, we have a criteria that we use to define a good market. And it looks at legality. Are short-term rentals allowed in that city? And that can disqualify a good number of markets. If it is allowed, then we look at markets that have ideally over 100,000 people in population, and the population on the increase. And we like markets that are not necessarily traditional tourist destinations, but those that have a university, a hospital, and ideally some sort of a regional business hub there. Because we don't necessarily like to rely purely on tourists, but we prefer if a market has a diverse stream of guests, including, again, academia, business, travelers, and so on.
Wow, that's very good. So Midwest, that's interesting too, because this is also where we invest. And I mean, what you mentioned also is that you want to live where you want to live and invest where the numbers make sense. And this is what I've been telling a lot. I live obviously in LA. I used to live in the San Francisco Bay Area, and the numbers didn't make sense. I mean, I wanted to have a cash flowing real estate property, and the numbers didn't make sense. Yes, I could have something that cash flowed, but then I had to put so much cash into it that the return was ridiculously low.
Absolutely. And it's interesting too, because there's a lot of assumptions that we had going into it that were effectively broken. So one, for example, we thought that if we invest somewhere else, we would have to go there maybe every couple of months to
Yeah.
check up on the property. And even before COVID, but especially during COVID, we were not really able to travel, and we realized that it's not that important. We still like to go out to every market every 18 months or so, but even that's purely just kind of for ourselves. There's no distinct reason to do it. The other thing that we realized is that even in the markets that we invest in that are within driving distance of us, that we can get to within an hour or two, we still treat them as if they're 1,000 miles away, because the logic is the same. Even though you can go and deal with a problem, you should structure it in a way that you don't have to.
Yeah, totally agree. And by the way, I want to tell the listener too, like we talk about the market and whether it's legal or not, and whether the population is there's enough population and all of that. You have built a website called Build Your BNB, and on that website you actually talk about the markets, and this area is very it's part of the resources tab, I believe. And then you can go and look at every single market that you're interested in. It's going to tell you what the rules are for setting up an Airbnb in that town, the population and stuff like that. So that's very, very powerful and very, very good tool. So thank you for putting that up.
Yeah, exactly. This is what we use for ourselves. And we essentially hired a team to look at every single market in the US, over 100,000 people. So that's about 330 cities. And then we also looked at the top 100 vacation rental markets in the US. So some overlap, some of them are additional ones. So let's say it's about 400 markets total. And we organize this information. We update it usually once a year, and it's all free, available to anybody. And like I said, we use it ourselves.
Mm-hmm. So the other thing too, that's so you pick a city, Midwest, let's say. I don't know if you're in Memphis or Cleveland or these kinds of town, but so let's say you pick a town, you say, this is the city I want to be in. But there's more to it than that. You also have to pick the right neighborhood where the value kind of makes sense. The price of the property versus the amount of money that you can get from your short-term rental. So how do you do that?
Exactly. So it's interesting. Our MO effectively is we usually don't invest in downtown areas or the really expensive ones. We find that going into B class neighborhoods, and sometimes even, let's say, C plus class neighborhoods, we can get a much better return. And frankly, as long as we set the right expectations with guests, and as long as the property itself is renovated and designed well, it's really not a problem for the guests. And as I mentioned, the returns are just much, much higher. So of course, you want to avoid war zones or places where somebody goes out and they just feel unsafe. That's not what Airbnb is about, but there is effectively a pretty big range that you can work with. We also do try out in some markets, kind of more downtown, higher end areas that work absolutely fine too. But again, because the acquisition price is higher, the returns end up being lower.
Excellent. All right, so that's great. We have a market identified. We have a neighborhood identified, B and C plus kind of class neighborhood, close to university, close to hospitals, and stuff like that. So how do we, when we look, so we find like some properties that kind of that are available for sale, and how do you run the numbers for these particular properties?
Absolutely. So a couple of kind of personal tips. From our perspective, we usually prefer to look at multifamily properties. So ideally 2, 3, or 4 family units, because those you can still get a residential mortgage. So the rates are quite low, but the benefits are significant because you effectively get multiple short-term rentals in a single building. So you achieve more economies of scale, you get higher returns, it's easier to hire a housekeeper if you can provide them with more work. So again, this has been working out very well for us. versus, let's say, single family properties or condos.
Okay.
So that's that. For us, we also try to come up with a threshold of price per bedroom. And the reason it's important is because it allows us to kind of compare apples to apples. Because if you have, let's say, one property and it's one bedroom, let's say, unit for $100,000, and again, these are abstract numbers, or you have a 3-bedroom unit for $200,000. For us, a 3-bedroom is going to be more appealing because we know that we're paying less per bedroom, and effectively your income is really tied to how many people you can host.
Yeah.
So we know that we can get a higher return there. The other kind of side effect of this is we prefer larger properties because we don't want to compete with hotels. So that's why, let's say, studios or 1-bedroom apartments are not really appealing to us, because in that case, a guest is always comparing you versus an option of staying in a hotel. But when you have, let's say, a 3 or a 4 or 5-bedroom apartment, then you're offering something unique. You can target larger groups that are willing to pay a premium and to stay together effectively. And again, usually you end up with a lower price per bedroom. So we like that one.
Yeah, that makes sense. Even from my experience too, when we are looking to travel somewhere, we're looking at, hotels. But then I have my kids and girlfriends and all of that, and then I have to get like three hotel rooms, and it's just like, and then you add that up, and it goes up very quickly. And this is when you start looking at Airbnb or other bed and breakfast option, and you say, okay, well, now I can get like a 3-bedroom or 4-bedroom, and then I can host everybody into that house, and I save a lot of money. So I think that makes a lot of sense when we're comparing. So you're really targeting a different kind of market, a different type of clients that they really have nothing to compare on the hotel side, right?
100%. Plus, it's a different experience. When a group travels together, they usually like to have a place where they can all be together. Hotels are just a little too cookie cutter, and they just lack that common area where you can just hang out. And the other thing is, one of the trends that we've been seeing in the last 15 months or so, since COVID started, is we've been seeing a lot more families and groups traveling together domestically because they can't go abroad, and because it's perceived as a safer way to do it if you travel effectively with kind of a small bubble of friends or family. So there is just a lot more demand for these larger properties for places where a group can stay together.
Yeah, that sounds good. How do you, so what do the numbers look like in general? Like in terms of, I mean, you're going to find kind of like your short-term rent, but, it varies throughout the year. The occupancy is obviously going to be something that's going to be important. Occupancy from one area, even one neighborhood in the city, it might be different than in another area. And so how do you figure all that out, and what do the numbers look like, as an example?
So it certainly gets easier once you're already experienced with the market and with a certain, let's say, profile of property. But one of the best tools that we recommend to others and that we use ourselves is called AirDNA. And what AirDNA effectively does is that they scrape data of every single Airbnb listing and every single VRBO listing, and they crunch the numbers, and they can provide you not only with market data that can show you what the average occupancy rates are, what the average daily rates are, and so on, but you can even put in a specific address for a property, and it will look at all the comparable properties within a short distance of it, with the same number of bedrooms, bathrooms, number of people that it can accommodate. And it will give you a pretty accurate number of what you can expect that property to generate. I mean, you usually will subtract maybe 10 to 15% just to make sure that the number still makes sense if we're extra conservative. But it's a really great starting point.
Okay, excellent. So what would be a typical, so now you buy the property, you put the mortgage together, and so as you mentioned, it's going to be just a regular residential mortgage that you're going to put. And then do you have to put more like down payment because it's an Airbnb property, or is this just is the same as a normal rental?
It's absolutely the same. So it's
Okay,
treated as
okay.
an investment property, and most of the banks are becoming more and more comfortable with that as well.
Okay. So what did your cash on? So you put 20% down, let's say, on the property, and then what would be your annualized like cash on cash return for that property?
Sure. So let's
Typically.
run through numbers for a typical property that we've actually acquired about 3 years ago. This one actually is a single family house. It's based out of Minnesota, and the property costs about $300,000. We put down 20%, so that's about $60,000 plus, let's say $10,000 worth of closing costs, plus let's say $15,000 to furnish it, and another $10,000 to kind of renovate it. So that brings us to, let's just round it up and say $100,000 all in to acquire and set up that property. Now, on a typical year, that property will generate around a little over $5,000 a month in revenue. So it will be, for us, it's been around $65,000 a year in revenue. Now, the expenses, of course, are going to be a little higher because you're responsible for the utilities. You have a housekeeper. You have to provide the supplies. But when everything is said and done, we can usually net about $20,000 in cash flow on that property, plus the principal contributions, plus appreciation. So basically, we're looking at roughly 20% cash on cash return.
If you just, so your net cash flow is 20K after you've put the after you paid the mortgage, right?
That is correct. But for the purposes of the discussion, we're treating this as pure. So the mortgage being interest and principal.
Yeah, that's right. Yeah. So that's after you've paid the mortgage payment. So you net about 20K per month. Okay. So I just, because I want to compare also kind of what if we're looking at single family rentals, or people are looking at my website for single family rentals. So that's, I mean, this is pretty good return, I think. We don't also, when we compare our turnkey, our returns to, we don't include appreciation, and we don't include the principal contribution, but just for apples to apples comparison. So, all right, so that's based on that. I mean, I'm 20K divided by 100K in, so that's about a 20% cash on cash return for this particular property. Is that right?
Absolutely, and that's exactly it. And the one thing that I would also say, and this is very counterintuitive, but what we found is that the properties also stay in really good condition year in and year out. So part of that has to do with the fact that the guests that come in, they usually don't interact with the property the same way that, let's say, a long-term tenant would. So they will, maybe cook less. They don't install furniture. They don't hang, pictures on the wall. The other part of it is you have a housekeeper there multiple times a week, effectively maintaining the property at a certain level, and also allowing you to address issues immediately as they show up. Yeah. So a lot of our properties, 3 or 4 years into it, they look almost the same as the day that we launched them.
Okay, that sounds good. Then, and I think also some of these, I mean, when you are renting the property as well, there are fees in there for it is a security deposit. If they break something, then you can take from the security deposit to fix what they've broken. And then there's also a cleanup fee, I think, also that's added. So literally, you're not really paying for the cleaning, the housekeepers. You're basically, because the guest is really paying for that as well, right? So
That's right. And it's interesting. Airbnb is interesting in that way, in a sense that we don't necessarily charge security deposits for most of our guests, but we do pursue claims with Airbnb for damage. And I would say that on average, we have about a 50 to 70% success rate. So if a guest does damage something or break a couch or break a bed, and we file a claim with Airbnb, usually we can get most of the money out of Airbnb to cover for that.
okay, that's good to know. All right, let's talk about automation. So now, I mean, the biggest part, so a lot of it, I mean, you mentioned the Air DNA to kind of figure out the pricing and all of that. There are other tools out there that you mentioned that can help you with really set up your pricing for the whole year, looking at competitors, etc. To me, the big one is the property management. So that's like, where do you find property management company that are going to have the housekeepers and all of that and the walkthroughs and manage the guests really?
Good question. So I would say there's two types of directions you can pursue. So if you are an individual who, let's say, buys a vacation rental property somewhere in the mountains or in a city really, and you want to have it for appreciation and some cash flow, but you're not too focused on the return, then it makes sense to hire a professional short-term rental management company. The problem with that is that a lot of the companies charge around 25% of your gross revenue to manage your property, which oftentimes ends up being your entire margin. So for us, our strategy is a little bit different. So there's two steps to it. The first one is, when we set up a property, we usually go out to that market and spend maybe at least a week, but typically 2 to 3 weeks, just kind of overseeing the renovation if there is one, setting up all the furnishings. And simultaneously, we actually begin to interview and test out housekeepers and handymen. The housekeeper and the handyman is effectively the ground team that you need in whatever market you have a short-term rental property in for it to run without your presence. Now, typically we have a pretty good success rate. So we'll hire a housekeeper, train them, document the training as well, so that if they ever leave, we can remotely train somebody else. Usually, again, we'll already work with a couple of handymen as part of the setup process. So we just pick out the best ones that we've enjoyed working with, and we stay in touch with them. And then once the property is launched, you can handle pretty much everything through your phone, through sending messages, pictures, videos, that sort of thing. What we noticed is that when you have 2 or 3 properties, it's pretty easy to do it all yourself, even while keeping, let's say, a full-time job. Because even if issues pop up, it's not frequent enough to be a big distraction. But once you go beyond 3 properties, once you go to 4, 5, 6, and beyond, then you need to think about setting up a virtual team to help coordinate things with the guests, to help coordinate things with the housekeepers and maintenance crew on the ground. So for us, it began with hiring one individual, kind of like as a virtual assistant at first, to help us manage this as we grew. And today, we actually have a team of 3 operations managers. Some of them are working full-time for us, some of them are part-time. They're oftentimes based abroad. And they effectively help manage the operations 7 days a week from, let's say, 9 a.m. until 11 p.m. and coordinate everything with, again, guests and the ground teams.
Yeah, I think a lot of it is, so that's very good. I like the PM, and then kind of when you get out there, you can interview the PMs and then the handyman to do the repairs. And the VA, obviously, that's also something that can help in the operations. What about the guest experience? Is this something that the VA handle, or is this something that is, is necessary to worry about, or is it just how do we handle
Absolutely.
that?
So we have a lot of different feedback loops. So for example, every single review that we receive from the guests, it goes into our communication tool or our project management tool. Our operation managers review it. If it's positive feedback, we pass it on to the housekeeper and just let them know that they're doing a good job. If it's constructive negative feedback, we analyze it and decide, is this something that we can address? And if so, then again, the operation manager will communicate it either to the housekeeper, to the maintenance, or in some cases to us, if it's kind of a bigger level issue. Also, we have a tool that we set up, which is effectively a form that the housekeepers have to fill out with photos every time they do a turnover. That form and those photos, they go into, again, our main communication tool. We use a tool called Slack, where the operation managers review it. If anything seems out of line, maybe, I don't know, let's say that we put in a bottle of wine for all of our guests. And if a bottle of wine is missing, then we can point that out and say, hey, just heads up, maybe this got missed, but please put it out, and things of that sort. So again, these feedback loops allow us to keep tabs on the properties even without being there.
Yeah. Are your guests also, I guess your guests are not really like tourists, right? So that's a little bit different. I mean, you may have some tourists, but you're focusing more on people that are going there on business trips, like, or school or something like that.
It depends on the market, but the truth is there is a good amount of tourists. 30 to 50% are travelers.
The reason why I'm asking is because the other side of it is, are your guests actually asking you, say, hey, where can I go for a restaurant? Where can you guide me into what's to do? What can you do in town and that kind of stuff?
Absolutely. So the nice thing is 90% of these questions are predictable and very common, so we can prepare for them. So we do both offline and online steps to reduce the workload. So offline, we'll typically have kind of let's say, a laminated guide on the fridge that shows the best places to eat. In every bedroom, we'll have a guide on where to go and what activities to do. We have, again, check-in instructions and details on how to get familiar with the house when people come in and how to explore the house when they come in. And then online, for a lot of questions, we either anticipate them ahead of time and include them in the pre-check-in communication, or we address them automatically through the tools that we use. Or if not, then our operation managers, they're familiar with the properties, with the neighborhoods, with the areas, so they can oftentimes easily provide guidance to the guests.
Okay. That sounds good. So you mentioned that you try to get like properties that have like a duplex or triplex or even a fourplex, if you can find those. They are pretty hard to find, I must say, from my perspective. But if you have like single families and stuff like that, are you trying to concentrate these single families into some markets, or you'd like to spread them around? How do you handle that?
So in the beginning, we wanted to test a lot of different things. So right now we operate in about 5 different cities, 5 different markets. As we progress, we already have a good sense of what works better than something else. So future properties are much more likely to be added in the existing markets. So in the very beginning, there are certainly benefits of concentrating them in a single market. Again, just because you can have more backups for housekeepers and more work for the handyman, but it's not, strictly speaking, necessary.
Yeah. And also you pretty get to know your market very well. You get to know which area is very good, and if you found a good area, a good neighborhood, then and you know that another property is becoming available, that could help as well. So it might be a little bit easier at the beginning to get started, I guess, for new people that are interested in short-term rentals.
Absolutely. Yeah. Every market that we've invested in, we continue to monitor it very closely. So whenever new properties do pop up on the MLS or off market, we usually try to, if we're in the market to acquire another one, we'll try to jump on it.
Excellent. Well, before we wrap up, Boris, anything else you want to add about kind of how exciting the short-term rental is? How would people get a hold of you if they are interested? I know that BuildYourBnb has a lot of information for listeners interested in short-term rentals.
Absolutely. So I would say my takeaway from doing this for the last 4 to 5 years is that short-term rentals are not necessarily the most passive investment, at least in the very beginning, that you can get, but it certainly has very lucrative cash flow, and it does get much easier as you get more comfortable, as you begin to build out systems and kind of think of how to replicate them from one property to another. And if you do have any questions, feel free to check out buildyourbnb.com. We have quite a few articles there. We have a guide that we've written about our journey. And of course, you can contact us through there directly as well.
Very good. Well, Boris, thank you. It was a pleasure speaking with you. And so just go and build your BNB. If you're interested in short-term rental, there's a lot of resources and articles there for you to get started. Thank you, Boris.
Thank you, Eric.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.